Welcome back. We will straight away get to our next corporate conversation. We are looking at Venkys now, which reported a slightly weak set of numbers for the second quarter. The key factor to watch would be, of course, the trend of raw material prices and the outlook going ahead in the second half of the year. Mr. B. Venkatesh Rao, Managing Director of Venkys India, is now joining in. Let me quickly run through the numbers first for the benefit of those who might have missed. Top line grew about 26% for Venkys. There was a fall in the gross EBITDA, in the gross margin and the EBITDA margin as well. And of course, it's the operational performance that came under a bit of a cloud. Mr. Rao, thanks for joining in. Can you tell us why there was this compression on the operating side and what's happening with your raw material costs?
Basically, the rates have gone up and had gone up for maize and soya, particularly maize, and you could see that rains had unseasonably extended, and the total incoming crop got spoiled. And especially, and then even the rates went down for broilers because J&K market had to, administration had to close down for the state. The input of the chicken also stopped from the northern states. So automatically the consumption, I think the production became more in the northern states, and there was a closure for J&K, and that's how the rates in northern area didn't pick up, and seasons and the festivals were there and things like that, and rains were excess. And I think the soya and maize this year all over India is totally spoiled because of this excess rains. Now 15 days have passed, the sunshine, and I think basically you can dry the maize, and the contents of basically moisture is coming out. So I think you can see the better half. But because of this J&K closure and the not movement for the broilers, particularly, there was a glut in the market. There were heavy birds. Now the birds have started moving, and you couldn't get the realization. And the realization is not there. I'm sure that your bottom line of the industry goes down. So particularly in the southern zones, also the state, the pressure was to get the maize from the northern zone because of the rains and all that, and particularly in the Marathwada area and other areas also the soya got totally disturbed because of the excess rains, which I think 1.5 months they were continuously pouring.
Okay. Mr. Rao, how are things looking like in the third quarter? Will EBITDA be under pressure, EBIT be under pressure even now?
Third quarter, I think, is slowly easing down because what is happening is there's going to be an excess maize coming in next month. And already 6 rupees difference last 1.5 months has come down. And realization, of course, broiler is improving because seasons, I think there's opening up of Christmas, New Year, and consumption in winter automatically goes up. So you can see this jump of, the consumption in the segment.
No, will you make money at the EBITDA level?
I think we should. I should not talk too much. We should, because if the season is coming, then naturally we should. The bottom line should improve, madam.
Okay. How much is J&K a part of your market? That I mean, so far no company mentioned J&K as a factor. Was it a big part of your market?
It is not only us. It's as a broader industry. I think the J&K is a huge market. It's 12 months a season market, and it's a huge market which takes particularly from Delhi, Chandigarh, and other northern zone states the chicken.
So can you give us a percentage? I mean, for your total volumes, how much would J&K be?
Northern, I think northern part it should be at least about 6 to 7% pickup.
Oh, yeah. Okay. So overall, can you give us an outlook? At least on the top line, for the year as a whole, J&K being the aberration, how much do you think you can do?
I think, giving a top line description is very difficult, which I said, the seasons and after seasons, we will be, after festival season, we'll do good. But, rains came in between. Last time there were no rains last year, and we thought, okay. But this is a very unpredictable scenario going on with the climate. So, of course, we are very positive of the consumption coming. At least 10% of the bottom line we should maintain, I think, and next quarter should do good.
Okay. Any guesses on when maize and soya prices may stabilize?
I think by January end on February, I think it should start going at least okay.
Okay. Is there a chance that you will be able to push up the prices of your end products to account for this higher raw material cost?
I don't think so. We can do that, and of course the traders do that, not the producers. But we can at least look at the raw material coming down, and then you can see a better profit line.
Okay.
Okay. All right, Mr. Rao. We'll leave it on that note. Thank you for joining in. and giving us some more color on your business. So well, there we see the vagaries of the weather and some of these issues, how they impact individual companies. Definitely hit Venkys. Need to take a quick break, but before that, a quick check on the financials of the company. Let's see how Venkys has done in the last couple of years. First up, the revenue picture, and that's fairly steady over 17 to FY19. Let's bring up the EBITDA margins, and here there'll be volatility up as expected. So from a peak of 14%, margin fell to 10, and of course it's been all over the place so far this year as well. Now let's take a look at the profit after tax. Again, FY18 was a good year for the company, and then it has come down. FY20, as he said, hoping that there will be recovery in the second half. Finally, the EPS trends, again, dipping a little bit in FY19 to 123 rupees a share. Quick break, back with more on the other side. We have more earnings reactions lined up. In fact, we'll be touching base with Shekhar Ramamurthy of United Breweries.